Everyone's talking about off-plan, but is it a smart investment or a risky gamble? In today's video, we'll be breaking down what it means to purchase a property off-plan, the benefits of doing that as an investor, and the risks you need to be aware of if you're going to do this. If you're new here, welcome. My name's James, and this channel is all about helping you build and grow your knowledge about property investing, all without gimmicks or unrealistic promises. I'm the co-founder and managing director of the property investment business called Frater Property Partners, but this is all about helping you. If you like the content, don't forget to hit like and subscribe to the channel, but let's get started. What is off-plan? Purchasing off-plan is essentially buying a property during the build phase of that property. So you're buying off the plans of that property. It's most common in city centre developments where there's big regeneration and opportunity to purchase properties that you may not be able to secure at the point of completion. Essentially how it works is you reserve an exchange on a property now and complete on that property in anywhere from 6 months to 24 months time. Some off-plan developments are over the 24-month period, but those are few and far between, and the risk involved in those is probably a little bit higher. So what are the benefits of buying off-plan? The first is phased payments. With most off-plan developments, you have the opportunity to secure a property with less than a 25% deposit. You can phase the rest of that at the point of completion or in a way that there's a payment plan, and then complete on the property where you pay things like your stamp duty and other costs there. This means that if you've got a pot of cash of 50 grand and that doesn't cover the whole deposit and stamp duty and things like that, but you know you're going to get a bonus or you know you have more money coming in the future, it gives you the opportunity to put your money into something that will grow in value rather than leaving it in the bank and letting inflation eat away at it. If a developer's asking for 25% or more initially, then that's probably a red flag. The next benefit is a pre-launch pricing, which is a pricing at a discounted rate because you're purchasing off-plan. The reason that developers offer this is so that they can show their funders that these properties are in demand. It de-risks the site for the developer and their funder and essentially builds more confidence that they're going to make the profit that they're looking for with building this site. This often means that if you're buying a property with a pre-launch discount, you'll be able to get equity at the point of purchase. Having said that, don't just believe the hype of a discount. You need to make sure that the discount is genuine and they're not just offering you a so-called marketed £20,000 discount. The next benefit is the opportunity for future capital growth. If you're buying a property off-plan and you're able to secure it with a less than the 25% deposit, you're able to benefit from the capital growth of the asset without even having put the whole deposit down. This means that if you're buying a property in an area of growth, you're able to lock in today's value, benefit during the build phase of the capital appreciation, and then complete on the previously agreed price so you get equity at the point of purchase. For example, if you buy a property in Leeds worth £250,000 and during the build phase of that the property market grows by 4% a year, you've got that 8% worth of growth during that build phase with only putting a 10 or 20% deposit in. And the final benefit is you get exclusive access to these sites. Buying off-plan often gives you the opportunity to pick the best units at the best value or with the best yields and have freedom over that choice. By the time this development completes, the chances are the best units will have already been sold, which means that if you wanted to purchase then, you will have missed that opportunity. Again, this type of thing happens a lot of the time with good quality units, good quality aspects, or penthouses, which means if you're looking to purchase good quality or unique properties at the point of completion, you might be too late. Obviously, all of these are really good benefits of why you might purchase a property off-plan, but there are a number of risks you need to be aware of before you do this. The first risk you need to be aware of are risks associated with the developer. The two main things with that are delays to the development and what if the developer goes bust. If there's a slight delay on a development that you've purchased and that goes over by a month or 2 months, it's probably not the end of the world. You'll still benefit from the capital appreciation during that time frame and you'll get the opportunity to complete and get a tenant in that just a couple of months later. Having said that, if that development just has delay after delay after delay, it's obviously not a good thing. You will have a long stop date in your contract, which is usually 12 months after the scheduled completion of the site. But ultimately, you don't want to get to a position where you're having to try and claim your money back if a developer doesn't deliver. The same is if the developer goes bust. This doesn't happen very often, but I have seen it firsthand happen a couple of times, and it's not a good situation. This means that as the buyer, you need to do a few things to really mitigate your risk of this happening to you. The first is the developer's track record. Have they delivered multiple projects in the past, and have they delivered on time? If they have this track record, you're very unlikely to have more issues with them. Developers you might have seen in Manchester like Salboy and Relica have really strong track records and deliver good quality projects on time. This means that your risk as an investor is significantly lower than it would be if it was a new developer. You then also need to be aware of deposit protection. As I mentioned before, any developer asking for over 20% is a big red flag. The ideal scenario is that you're able to get into a project with just a 10% deposit, but it isn't always achievable and it isn't always realistic, even for the best developers. Let's take Salboy in Manchester, for example. They've delivered lots and lots of projects. They've got a really strong track record. They've got really secure funding, but they require 20% deposit on most of their projects. This doesn't necessarily mean it's really high risk for you, because you know they've got such a good track record and you know that they deliver on time. Having said that, if you're looking at a developer that doesn't have that track record or that financial backing in place, then a 20% deposit can be a little bit uncertain if they don't have deposit protection up to the level in which you need. So every time you buy an off-plan property, ask the developer or the agent, what is the deposit protection and how is the deposit protected? You need to look at the detail of that, because just because somebody says a deposit is protected, it could be in a roundabout way. Is a deposit held with a stakeholder? Is it released to the developer? Or is it insured by a third-party insurer? The next risk you need to be aware of when purchasing off-plan is the pricing. Just because a developer says a property is priced at a certain level doesn't mean that that property is actually worth that. Some developers are really fair with their pricing and pricing correctly to the local market, but this isn't always the case. If a developer can charge a higher price for this property, they might try their luck. Not all developers are made equal. This is where it comes down to you to do your due diligence. Go on Rightmove, look at comparable evidence of similar properties in the local market and make sure that you're confident on the price of the property. You could also use external data sources like Property Data, and I'll put a link to their website in the description. The fourth risk you need to be aware of when buying off-plan is the changes in the market. Although it's unlikely that there'll be a big downturn in the market, if there is a slight downturn, you might not get quite as much growth as you're expecting during the build phase. Obviously, nobody has a crystal ball, but places like London haven't really grown as much as other locations in recent years. And if there is a downturn in the market, the chances are places in the southeast and London will be more negatively affected than places further north. Finally, the last risk you need to be aware of is lending at the point of completion. This risk is very much linked to the pricing of the development, but you need to be confident that you'll be able to get a mortgage at the point of completion. You don't want to have to deal with big down valuations at the point of completion. So again, it comes down to you to do your due diligence and make sure that you're confident on the pricing of the property. Although you won't need to get a mortgage until completion, it's worth speaking to a broker now just to get indicative figures and work out that there is lenders available to lend on that side. Sometimes there can be some slight mortgage issues with big regeneration projects if a development is a first of its kind and there's no real comparable evidence, but as long as you're aware of those risks, then you can choose which way you want to go with things. So, is it worth buying off-plan in the current market? In my opinion, yes, it's still definitely worth buying off-plan in certain locations of the country. As like anything in the current market, I wouldn't be focusing on London because of the lack of opportunity of capital growth right now. But if you do your due diligence, you buy the right development in the right location with a developer that has a good track record, you're going to maximise your opportunity of long-term growth. Not only this, it allows you to get into good quality sites and pick good quality units with less money down than if the site was completed. Here at Frater Property Partners, we help people buy both completed properties and off-plan properties, and they can work really well for certain clients. I wouldn't personally go for this if you're trying to make a quick buck and sell the property upon completion. You probably won't make lots of money doing that because of the costs involved in completing the property and everything. But if you're willing to purchase property, own it for the long term, get into the right locations and benefit from the growth of those locations, buying off-plan could be a great way to do this. But just like any investment and like any property investment, you need to do your due diligence and be confident before you put your money down into something. If a developer doesn't have a good track record and they're being coy of how the deposit is protected, then maybe it's time to walk away. But let me know if you have any more questions about buying off-plan or any other strategies, and I'll see you in the next one.